Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. Could I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab chat? Okay, great. Thanks. Thanks, everybody. Thanks for visiting the Trader Lab this morning. So you guys know, my internet has been intermittent this morning. It's been up and down probably about 8 times. Currently, it appears a little stable. I think the monkeys are out to lunch, or maybe went to lunch. They're always out to lunch, and but I've been having trouble. So if I go down here, I'm streaming from Costa Rica. You can access the stream. I should be able to reconnect in the Bookmap Discord Trader Lab. If I'm in YouTube, I might lose the stream and not be able to reconnect, though. I have help from the Bookmap team to try to get a link back into YouTube. But if that doesn't happen, there is a link in the bottom of the chat in YouTube, and you could come over to the Bookmap Discord server. You don't have to be a Bookmap subscriber, and Bookmap would never solicit you. So if you want to take that route, you can. Just want to let you know there's some options, and hopefully Bookmap will have my back on this one. If the internet does go down, I lose everything, obviously. And then modems, routers, and all kinds of stuff have to reset. It all takes time to come back up. That's assuming it even does. Power goes in and out, and everything gets crazy. So that's 91 degrees, 92 degrees, and you're in Costa Rica. So a little of this, you get some, you lose some. Anyway, thanks for visiting the Trader Lab this morning. I'm your host, Tom B. I do stream live Monday through Friday when the wind is blowing in the right direction and the monkeys aren't swinging in the trees. And this stream is about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. The important thing to understand, this stream is about helping traders understand market mechanics, how the market works, why it does what it does, how you might get in alignment with it at times. Also, like everything in trading, it is a random environment that we operate in. So it's not, while it might be conditional or somewhat formulaic, it is absolutely not predictable. That is the random nature of trading. So what we attempt to do in the Trader Lab, and what I've done for the last few years, is share structured trades that you can reverse engineer. It's absolutely free. They're all available in the Bookmap Discord Trader Lab, as well as a community of like-minded traders who are serious about creating a business or career in trading, and to also learn market mechanics and the reality of what trading is. Trading is not what most of us think it is, especially in the retail space. I think we're misled, or we just have a fantasy, So, and whether or not we're misled intentionally, that's a different topic. But the fact is, there's no secret sauce. There's no hidden agenda in the sense that somebody has anything over anybody else in this business. It's really differentiating what you do from what retail traders do. Retail traders tend to do the same behaviors and use the same processes. If we can learn from what they do, and you can learn from what you do or have done, you can now potentially get a yield from it. And despite everything, all traders lose dollars. So the difference is, and this is really important, I think, for us as who now are retail traders or professional traders who've migrated to retail, whatever you are. And if you're professional, you understand these things. But most retail traders never exposed to these ideas or concepts. This business is a gaming business. That means it's a probabilistic business. And I always want to start with this because there's no magic indicator. There's no secret sauce. There isn't something somebody has found that, has never been revealed before. That's nonsense. What it is understanding that the function or basis of this business is gaming, which means it's by gaming, a statistically based business, and losses, in spite of our psychological and emotional attachment to dollars and how we feel about it and all this other stuff that comes in based on our wiring. It's really overhead and cost of production. It's easy in concept, but it's not easy from an actionable point of view, because how our emotional states, in my opinion, interfere with that. So this is something that I think we always want to be focusing on, and this is something that I think you'll go a long way in understanding business, and take responsibility for things you have control over. That's a trade plan, only trading when you have a statistical edge, managing your emotional states, your FOMO, your impulses, all the things that derail most retail traders. This is really the challenge of trading. In my opinion, you can learn how to trade. Whether or not you have the tenacity to go through the learning curve and the wear and tear that it takes to try to undo habits and even potentially defective beliefs, which I will talk about somewhere along the line here if I have time. All of these are elements that come into the business of trading. And these are the things we continually work on in the Trader Lab. You're never there. This is kind of like there's no end point. There's only growth, understanding, and development. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is based on structured trades that are available to all of you in the Bookmap Discord Trader Lab, as well as a library of webinars on how this process might work. And not only that, in these library of streams that I have in the Trader Lab, some of them are up to 4 hours long, and you'll see real-time narration. Now, the interesting thing about operating in a random environment is that what works one day will not work the next day. Or, like a casino, you're dealing and you're playing a game, let's call it blackjack, you deal the cards, you clean the dollars from the gamblers, and all those dollars flow to the dealer in the house. Next hand, played exactly the same way, all the dollars that are on the table go to one of those gamblers sitting at the table. What's the difference? Well, the difference is the random outcome, the cards dealt by the dealer and how the gamblers did the play. And that random distribution of behaviors and outcomes, random cards, random play, just happened because of the random distribution of all these elements. The dollars flowed to the gamblers. So the gamblers keep coming back to the table, and they have intermittent success. Well, the house stays at the table, has anchored inputs, so they don't have these random behaviors. So they play the game, and let's call games setups or structured trades, exactly the same way. So anchored. That means they can measure it because it doesn't deviate. The cards deviate that are dealt, the gambler's play deviates because that's all random. The way the game's played does not deviate. That's where the edge is created, and that's how the dollars over time in a random environment are extracted from the gamblers. That's casino, that's gaming. Our business is the same. Start with that, in my opinion. I'm always going to say in my opinion because when I came into trading, I thought it was, let's predict where it's going and what it's going to do, right? So anyway, let's go take a look. Now, I'm going to say I want to start at the beginning of this. Grab a pen and a piece of paper, take some notes. Now, I know you guys have been following the stream for several years. Many of you have, and there's a large community in the Trader Lab. But the reality of trading is there are days where it's just like what is going on, and it doesn't fit a trade plan. Now, and this is going to be a day that's really difficult. And I will tell you that, I do talk to other traders, and I'm talking substantially large traders, professionals, okay, not retail traders. And this is hard for them too. So you got to put things in perspective. Sometimes you cannot make the market and your plan align. And part of your plan is to recognize when it doesn't align. And most of us are going to keep pushing the envelope for a lot of reasons, compelled to trade. I want to make it back, and that's what will really do damage because we develop plans for market conditions. when we can define them, and that's conditional behaviors, and we have a process for that in the trader lab. But when the market moves outside of those parameters, and we won't know until hindsight, let's just be real about this, then you have to have rules or conditions in place to protect you when your process and the conditions of the market are not in alignment. So let's go take a look. And I'm going to start at the RTH open so you can kind of see what goes on here. So, and you can see I have holes in data, like here the internet went down for a few minutes. So, and that was happening all over the place. This is the RTH open. Let me explain what you're going to see. Session volume profile. Now, volume profile, if you're not familiar, is just price and volume. Sounds real funky, but basically it's very simple. It just shows you what volume went off at prices and areas, okay? It's my bongos I'm playing, you know, beatniks. You ever hear of them? Is that noise too loud for you guys? The market pulse? I'm going to actually try something here with this. Let me see. Let me know if I can just get it down to the background. Now I don't hear it, of course. Anyway, you let me know if it bothers them. Okay, I just lowered it out. Okay. Okay. Sorry, guys. Slight tapping. That's me tapping my fingers on my desk here. Okay. Sorry about that. So, session volume profile is going to show us all the volume. These are higher time frame targets or levels that are relevant from an auction perspective. The cloud notes are coming off Investor RT. They show us important levels during the day, and they adjust in real time. These levels are current, so they show where high volume took place in the developing daily time frame. Don't worry about all these things. These are custom notes that as the market develops manually, I put in levels as they're developing. They're not automated. This is going to show us the chart volume profile. In other words, this is all of it. This is going to be starting at RTH open. I can zoom in and out using Bookmap, and I'll show you how I use Bookmap, which is I call the tip of the spear, to see the microstructure. And this is the delta. Whatever I see, I can zoom in and out and see the delta. Delta shows me where the buyers and sellers are. And the idea of delta, so you guys understand, is to try to see when we have a rotation, let's say if we think the market might rotate, where are the buyers stuck? Because they become the fuel if we counter rotate. So it helps with timing at times, like everything, maybe. And depending on how much data I pull in, I can see, the delta. So let's start out with the RTH open and a couple of other things. Now, remember, I promised you guys I would not do statistics, right? I have a hard time with that. But let's take a look at our locations that are important. This is called the naked volume point of control. It's around 47.98. It's a target coming up. This is the ETH high. It's a target coming up. Let's go to the other side. This is our open. We have a gap. This is yesterday's high. This is the overnight or ETH volume point of control. So what that suggests is this is too low, this is too high, and we have the potential to test this and this. And here's the and. Let me give you the next target. Now, these are targets, and like everything in trading, it's like, who knows, at 48.15-ish. The term ish is a trader lab concept because levels are not walls, they're areas of potential behavior. So it's ish. So 48.15, you might make a note of these things. This here, ETH high, targeting. Yesterday's high, fill the gap. Overnight, this thing here. This liquidity was here. I thought we'd be getting there. And we might. And then down here. So what did we do? In the ETH, now this is before the RTH opened, we tested this level. This was an open level from yesterday. Too low. What about here so far? We've tested this level. Too high. So the possibilities are the following. Trade that. Trade this. And here's why. We already traded this. This was retail in the ETH. This is all before the open. Is this too low? Is this too low down there? Maybe this is too low. Then it's reasonable to come back and check this. So that's a target on the hit parade. Is this too high? It's reasonable to test that. If I get through there, then there. If I don't get through that, and it could do anything in between, and it's like getting hit with a carp in the face. That's it. So that's the lay of the land before the market opens. Is everybody tracking? What's wrong with Bookmap here? Why would I be muting Bookmap? Is there a problem with it? Guys, is there a problem? You're getting audio coming through that's disruptive. Okay, guys, sorry about that. I'm not sure what. All right. Okay, let's go. RTH open. Now, what am I looking for? Let's go take a look. I'm looking for our first structured trade. Now, remember, this stream's based on structured trades, and it's also based on the reality of what happens when you trade. So, all right. I can't focus on sounds and things, guys. So let's take a look at this. Now we're opening, and this is the thing about this trade here, the current location on the open. I've got that. I've got this overnight mid as statistic. So my thinking on this was we're opening in the middle. Least favorite situation. I've got targets on both ends. I've got this, and remember, ETH high, and I have a statistic for this, but I tested this. Let's go back to the situation that we're in. I have overnight mid here, which is a statistic, and I have resting liquidity. That's a target. And let's come back. I have yesterday's high, the gap, because we opened here, and overnight volume point of control. That's a target, and liquidity is resting. I want to make sure everybody is tracking. It's very important. Okay, this is important, guys, and what makes this important is we're opening in the middle. Now, so I'm going to tell you exactly my thinking. I'm looking at this and I'm going, all right, and I'm muttering under my breath that it could go either way. So I'm thinking to myself, let's just go look. We sold off yesterday. We came back up. We got a nice tail, and we gap higher. That means the shorts are getting squeezed. So I'm thinking about it, and I'm going, okay, well, what would I do if I was short? Well, I would buy, I'd cover if I was short. That's one piece. The other piece is if I get the gap and I squeeze, then if the squeeze runs out, I'm going to want to sell it, and then I'm going to be heading back to this. So, but I have two scenarios. So I'm perplexed. So I'm saying as well, I don't know who's going to take the ball. Which side is going to take control first? Because that's what we're looking for. So now I'm going to go into microstructure, and I'm going to try to read it. But I also know I'm really standing on a banana peel. Is the audio clean now, by the way, in YouTube, guys? Is everything running pretty good now? So I know I'm in a problematic area. I just don't know what's going to happen. Remember, casino, random behavior, clueless. I mean, are we going to get the buyers and come up and check this level? But you see, it's already checked. There's my catch 22. Or are we going to get the buyers, come up here statistically, get our sellers, and come down to the overnight volume point of control, right? This. So that's my dilemma. So I'm going to tell you, it's a dilemma, but since I don't know the answer, I have to take the trades. So let's look at the first trade. So right here, this is called the variable high volume node. And all it is RTH open right there, 8:30 Central here in Costa Rica. And volume. Now, this is very sensitive. It tracks the volume coming in. Eventually, it's not going to be as important. But early on, it's an indication of pricing. And what we want to try to do is see if the current price, whatever it is, if we're moving away from it and the volume and the price are moving together. So let's assume the market goes up. Is it going up? What's it going up on? Is it going up on buy stops and new buyers, which might say in volume in this yellow line move higher? Or if it shifts down and we move up, are we going to pull back to it and revert? Because this is too high. So that creates the dilemma. So let's look at the first trade. So right here, I'm looking to see who takes control. I see a buyer. I see my pullback and test. Is this too low? And it could also just do this and rotate. So right here is my first test. There's my buyer. I'm going, okay, time to get long. Watch. VPOC migration. So I'm looking for a long. Now there's two possibilities. Here and here. Watch the behavior. Now remember, my problem with this is I can blast off and go up to my targets above, or I can stay in balance and do two-sided trade. That's what I know. I don't know what it's going to do. So right here, 85, I come down, 85, VPOC migration. Now remember, you've been following the stream, two possibilities. More than two, but basically let's talk two. Is this too low or is this too high? Is this too high? That's what I have right now. So I know if this is too low, and notice what it does. It checks right here. It pulls back. This is let me open it up for you, microstructure. And this is setting up a long. Now, I have my buyers here, right? This is delta CVD. I'm sorry, this is the delta down here. So this is saying buyers are in this leg. That's your delta. Okay. So here is micro high volume. And I'm looking at the 85. So let's just go back. You get a sweep here, sell sweep. So the book gets swept. Right here, it's either too high or too low. And I'm going to tell you this morning, I wouldn't call it joyous by any means. So this is support. So right here, so it's either going to go too high, break, or too high, hold, and break above. This is a long in the Trader Lab. And this is your resistance is sitting right there. So it's very nuanced and very choppy. So let's just watch. It needs to hold this and you'd be stopped. Now, if you're in the Trader Lab, what would happen here is subject to your plan, and this is all, again, a function of plan, you'd be long here, your stop would be here, and you know this is too high. You have to have enough range, and you want to scale. I always talk a minimum two lot configuration. The idea of a two lot, and by the way, everybody takes full stops, it's joyous. is to get risk neutral so you can keep your stop outside. So the idea of if this was too high, let's look at it. This little microstructure here is a sell trigger. Now, nobody knows it's a sell trigger until hindsight, because you see this. I mean, look at the similarity here. Chop, chop, break high, break low. That's what gives you this. What about here? Chop, chop, micro high volume, break low, check, short. Except it's not a short, it's a sell trigger. Now, we're looking to get long, right? Maybe. And I have a real bad time with this. You think you're the only one? If you did, welcome to trading. Because I'm in the middle, and I know I'm in a bad place to trade. I like to trade at outside edges. I'm in the middle, but that means two sides possibly, but I don't know that. So, but let's come back to this. If you see this, this is a consolidation in the micro. There's your seller. Here's the volume. There's the test. Too high, and that gives you this. Now we come back. Let's look over here. Where do we come back? To this volume. It's still too high. Now let's analyze this right here. There's my seller. What's too high? That microstructure. Now, I'm not trying to trade this in the sense of, oh, I got to buy it, I got to sell it. I mean, I don't know. Yeah, I'm just showing you the resistance. So if I get long here, what do I know? I know that's too high, right here. Before I go on, does everybody see this? How are we doing in YouTube? So how do we deal with this? Well, let me tell you that I have no crystal ball. Still, I sent it out to get polished. It never came back. And here's what I know. I know that's too high. But it's also a very small structure, so it's not strong. But I do know, if I understand how the market works, which, sometimes yes, sometimes no. I mean, I understand how it works. I don't know what it'll do, I should really say. I know this was too high. If I get long here, I have to look at this and go, well, I got my sellers. Is it reasonable to think we might get our sellers again if we come back here? Here's what I'm going to do. I'm going to scale in front of the volume. That puts my scale really out here. So if I get long, I'm really dealing with a shoehorn. Let's just see what it does. Here, scale, hold. Come on, Lewis. And pull back here. So far, so good. So this is the trade. You'd be long. You'd have to scale ahead of this thing. Scale, get risk neutral. If you have enough range, look at this. You're talking about 2-3 points. Pull back here. It needs to hold this out here. Let me open this up some more. This is it here, actually. Variable high volume node. This was too low. So you're getting your long, you're getting your scale, and then you're going north, hopefully, right? Pull back here. So this is too low. This is too low. So if this is going north, it cannot take this out. And you'd prefer it didn't take this out. So let's watch. Still looking good. Very excited. Very euphoric. Well, hardly euphoric, but thinking things are okay. And then we come down here. So right here, what this tells me is I'm in two-sided trade. So until this, we came back here, it was okay. We come back here, it's okay. We come back here, it's okay. If we roll under here, it's still okay. If we come down here, it's still okay. See the behavior? Your stop has to stay under here, and if you pull your stop up, you'd be taken out. You'd be taken out. That's just the way it is. And then you're taken out. So that's the first trade. So what do I know? Let's stop at the moment. What do we know now? Right here, and this is very hard, by the way, you know. Yeah, Willard's is saying he wishes he had a crystal ball. I think I have a bowling ball. So this is where this fails, okay? Now, once it does this, and let's take a look at what's going on. VWAP and mid, these are things you want to reverse engineer and think about. When does the behavior change? So far, here's what I thought. I want to give you the thinking here. RTH open, opening swing low, buyers. Oh yeah, here we go. Come down, take out the early longs, sell stops, there they are. Sweep the book, that's going on. VPOC drops down and we reject. So far, this is okay. Often, when you have something like this, early buyers, and we don't know, are these buyers or stops? You know, it's a combination, of course. Stops are going to be under this. So when this happens, it's not a big surprise to me. And then I have this, that's okay. And instead of pushing lower, I push higher. So that still gives me the long, you see. So I'm still good here. And it's even better once this happens because now I've taken these sell stops out. It's important to understand opening swing behavior. It's a separate behavior. In fact, I posted in the Trader Lab a while back, and I think I drew these by hand in 2012 or something. And I posted them there, opening structures, so like 5 of them, I think. In the Trader Lab, do you guys have those structures that I did on the opening count and the opening swing? It's like 4 or 5 waves or something, and how you can read them. Do you guys have that? If you don't, you should download them. I think they should be up there. If they're not, we'll put them up in the resource area. Well, if you guys haven't done that, then you should download that. I don't know if you have it or not. I should have it. It's in the resources. So right here, we're looking for it to continue higher. And when it does this, the context is changing. Oh, thanks, CMJ. Thanks for responding to the question. So this is your support, which is tied to this. Okay, stop sweep again. Now, right here, it needs to hold this level, variable high volume node. But here's the thing I wanted you guys to write down. VWAP, mid, and VPOC are aligned. If we're getting directional, they will start separating. What they're doing is they're staying level. That says there's no direction. And this is the key here. So right now we're in balance. What we want to see is we really don't want this taken out. And you could see the behavior right here. We don't want it taken out. We want it to come back above. And it does not. I mean, you see what happens? So the longs fail. Write this down. Mid, VWAP, and VPOC are not separating. That tells me I'm in what's called two-sided trade or balance. Now let's look at the profile. See what this thing looks like? It's Gaussian. That is a balanced market or two-sided. Nobody's in control here. It's just slosh right at the moment. Okay. So the idea of the longs is now like, what's going on? You know? So is everybody with me so far? Now we're in 5 minutes. Are you guys with me? Now this is a day where a frying pan to the head would be more pleasant, but it's part of trading, you know. So now we come outside. Let me open this up for you. I'm going to try to show you. Oh, get over here. Some other stuff here. We come outside. You'll notice I have nothing here. Let me open this up some more. So this kind of trading, this is two-side range-bound trading. It's not my thing. If you have a hard time in this, welcome to the club. I do too. It does not fit what I do because I have a hard time knowing where to activate. So let me show you some ideas with this, if I can. Let me just show you some things. Now, once you understand you're in two-sided trade, you have a decision to make. It's called mean reversion trading. It's outside in, and it's very difficult, so you know. It's very difficult to trade because you're trying to identify the outside, and it's called mean reversion. I'm going to try to see if I can show you something here, but I don't know if I can. Let me just try. So this is maddening, and it's painful because if you don't recognize that you're in balance, you're going to be taking directional trades. And if you're taking directional trades, you're just going to get smashed because you're going to be trading inside out, and you should be trading outside in. And it's a specific context. And I posted in the Trader Lab, what's your plan and what is the context? And I didn't get a lot of response, and I think I understand why, because it's confusing. Are we going down or are we going up? When it's coming up here, you think it's breaking out. When it rolls over, you think it's coming down. And this is very confusing. One of the ways to try to deal with that is to have a definition of balance. And you're not going to know anything about it until you see it, this. Okay? So you'll take stops in here because you're going to think it's directional. But for me, when it broke under that level, then all bets were off. So, So everything was okay for me, basically, until this. Then it was, oh, what's going on? And then back here and then out here. So I'm going, oh, what a mess. So this became a mess. Does everybody agree it was a mess? Yeah, very hard to trade. Okay. Yeah, huge mess. Okay. So me too. So, and I have statistics. The other part of this is I'm going, well, overnight mid is a good statistic here. And the overnight volume point of control filled the gap yesterday's high. These are all good statistics, even value area high, good statistics. So this is the short targets and this is the long targets, and I'm in the middle. I want to come back to that again because before the market opens, you are trying to pick a side to see where's it going to go first. And what it did is it just did this. So very hard. So let's go take a look. I wanted to show you some market pulse because in market pulse, where's this thing going? I'm hearing these alerts going off. Are we in the top or the bottom at the moment? Oh, the bottom? Okay, thanks. So we did take it. Yeah. So let's go take a look at this thing. Balance. See, so if you're trying to, I'm going to show you right here is too high and that's too high, but we are in balance. So we can come back in here, bounce down, and you might think you're going for this, or we can come down here, come outside, notice this liquidity in the book, and then come back outside here. I don't remember any of this. All I remember is looking at it and feeling the pain. Yeah. So let me show you something with Market Pulse. And I've been looking at Market Pulse, and I'm not an indicator person. But what I find with Market Pulse, when you get into two-sided trading, it might give you some, and you're using delta, because all two-sided trading is you got your shorts in a down leg, you get your buyers in the up leg. So the stops come up on behind here, and then we slosh So that's what happens in balance. Both sides are getting wrecked, pretty much is what's happening, at least if you're a day trader. Market is now long. There's the buy delta. This is the market pulse. So what this is showing us is extremes of behavior. Now, the problem, of course, with any indicator is it's very limited and it's not context sensitive. But if you can observe the behavior, you might be, now you have to, here's the other part of it. Do you want to trade mean reversion? It's my least favorite condition. And the reason it's my least favorite is because I don't do so good in it. Because I can't tell what's going on here. Is this a short back to the mean? Are we going to come to the other side, to the statistics down here? Or what? Or are we going to come up to this side? That's the dilemma, you see. So let's take a look. Now this is called the initial balance high. It's the first hour's high. It happens over here. So at 9:30 it's set. So 9:30 we pull back, we take it out. Now that means the possibility exists that we're going to come here and here. Okay, that's statistically where our probability lies. Now remember the caution flag. We got the ETH high and tested our target up here. That's the dilemma, right? Go back to the beginning of the stream. It's just what I know. But the beauty of knowing what you know is you also know you don't know, and that adds the joy. So right here, let's go to microstructure. And again, I have no clue. I get my range extension. So this is suggesting higher. I have this and higher. 48.15 is potential targets, but let's look at what happens here. Market is long. I get my range extension. Looking good, Lewis. Volume, looking for continuation. I see a seller. It's like, what are you doing here? Let's look at market pulse. Market pulse is at a high, and the delta is positive. It's reflecting. Let me just open this a little more. Here, right here. This delta is reflecting the volume in this leg. So that's buy stops by yours. So I have positive delta, and the market pulse is also hitting an extreme. So that is potentially a situation where we might get a rotation or not. Now you have to prioritize your input, and I don't use indicators. So basically, you'd be looking for these, but you'd also be seeing that we're vulnerable to rotation. So right here, you'd be looking. There's a seller. See the change in behavior? This is your volume in here. There's your pullback. Now, subject to what your trade plan says, you could exit under here, or here, or here, or not. It's all, but this is what's giving you a scenario of maybe extreme, and also the leg is the delta. So the buyers are in here, and these guys up on the top are trapped. But you don't know until you see the seller. Okay, there's no way to predict. Remember, we're not in the prediction business. And then you get this thing, and you come out. What we got an IB low. And where's our target? Yesterday's high, overnight volume, point of control, value area high. Now, there's no way for me. This is just a nightmare. Because remember how I started the top of the stream and none of this had happened yet. That is, this might be it for the upside or not. And we had this and this. And we have more to the downside if we get there. And to try to trade this is a maddening thing. Notice this. This is our highest volume from yesterday. That's the ETH low. So we tested it. Does that look similar to this? You see what I'm saying? You see why the dilemma, and we're opened in the middle? That's like balance, guys. So too high, ETH high, too low, ETH low, open in the middle, slosh, slosh, slosh. Is it logical? Are you guys tracking? It's important. So what do I know coming in? Let's go to the top of the stream. And if you missed the beginning of the stream, all this was laid out, not predicted, laid out. And then, and you have to pick a side. Well, and the reason I was thinking the long side was because the market is short and we would squeeze these guys. And that kind of put this on the table. So that's where the longs came in early. And I was okay with that because I was thinking if we get the longs, that sets up the short to here, to there, actually, right there. But instead we got chop. And why did we get chop? Because we're in the middle. That's the top of the stream. And it's important that you, now most of the time, this is not the scenario, but it is a scenario. So you got to look at today. It's very important that you understand today. Because this is a day, it's one thing to be making profits. We all want, of course, we want that every day. But let's also think about the days where we don't. Why? And it's important to study the days that don't work, and can you understand why? The thing is then, can you define why? Now, it's going to be after the fact because nobody knows anything. Remember, it's random. But can you create a conditional statement that when the behavior does not align with what you're thinking, right? And, basically it was up first to squeeze, maybe up, maybe to here, maybe to 15, and then rotate. So the longs first, and then the rotation, and then get to targets, and then rotate down to here. That was the trade plan. So you can kind of see it's doing it, but how do you trade that? I'm going to tell you, for me, not so much. Just the way it is. I mean, I'd like to tell you that I know something or the ability to navigate in chop. I don't do good in chop. I mean, what happens for me is win some, lose some, and it's kind of like after when the dust settles, how'd you do for the day? Because it's just not a good kind of trade. Like even this. If you're trading the mean reversion, and you come up here. Now, you don't know. How do you know we're not going to get here? And we still might. I don't know. You don't. Here's the seller. Let's look at the microstructure. Part of having a trade plan is if you understand you're in balance, you really got to trade differently. It's a separate plan. And you're not going to know you're in balance until you're in balance. I mean, you have to define it. You know you're in balance when we start sloshing around the volume point of control. Like now. It's still balance. It's still mean reversion. Notice what we're doing. Outside, in. Outside, in. And are we getting our targets? Oh, joy. Oh, rapture. What are we doing? Where's our target? Here and here. Fill the gap. What's sitting here? This liquidity's been sitting in the book since, back in the Stone Age. All the way back. This is how you look. So when I was looking over the horizon this morning, before the open, when I'm preparing, everything and kind of getting everything lined up, this is sitting in the book. It's in alignment with this. So it's a target for me. That's what was setting up the idea of longs, shorts to here. So I was thinking, well, here, And why? Because we already tested this. So I was going, well, fill the gap, get here. So that's kind of the thinking, and I think I don't mean to belabor it. And we already tested this. So I know if I got through here, I go to 15. When I say I know I might go to 15. If I can't get through here, then I'm coming here. If I get down under here, I'm coming here. But I already tested this. I know I'm repeating it, but I'm coming back to it because that's what I know. I don't know what it'll do, when it'll do it, if it'll do it. I know nothing else because I can't. So that's the trade, mean reversion. And so if you think you're in mean reversion, you cannot be thinking you're in a directional market. It is a separate trade plan. And again, for me, it's my least favorite because even if I get a good location, I get risk neutral. There's not a lot. By the time I respond or I'm trailing a stop, I'm giving back a lot of the open trade equity. I also have the joy of taking full stops. Well, how does that all wash out at the end of the day? A lot of trades, a lot of stops, a lot of scales and stops. If I'm fortunate, I'm going to have some profit, or I'm going to leave some for the sweeper. In other words, the casino is going to be picking up. The gamblers are walking out, and it's their turn, and it's part of the business. Don't like it, but that's what it is. And I hope you weren't looking for something different because I have no control over this. What I can do with this is I can try to define it as in conditional statements. And when I recognize the condition, I have a mean reversion trade plan, or I say, it depending on my metrics, I do not have a good edge in mean reversion. I'm not going to trade it. I'm going to study it. I'm not going to trade it. That's what you have to decide. You can learn to trade this, but you got to ask yourself, does it pay? Look at the range, It can. Here, let's look at this. High volume, seller, who knew? Here's your high volume structure right there. Notice we come back and test it. That's a short in the trader lab back to the mean. Now you come outside, you'd be going for this. Now you're holding because we're looking for this. We pull back here. Is this too high? Now we're going to check this potentially. This is a structured trade. You got to be trading outside in though. Can you do it? And you got to be thinking about getting long somewhere, subject to how we behave in here. So let's keep an eye on it, okay? Can you see the rationale, the dilemma, and the rationale of the trade? Yeah, I do not, Adamja, there are no cloud notes that I provide, but other participants in the Bookmap Discord Trader Lab do share cloud notes that are fed off of Investor RT, but that's up to them to share it. They do. That's part of the collaborative nature of the Trader Lab, pooling resources, working together. But here's the structured trade. This is the short. I was going to show you market pulse too. I want to try to get that into this so you could kind of see. And again, I'm not an indicator guy, but I'm showing this to you because I think if you understand the condition of the market and you understand its mean reversion, and this is the thing I always talk about indicators, and I don't use them, but the reason it's important is indicators have a time and a place. They're context specific, in my opinion. They're not generic. So you'll find, and that's why indicators, which are also random in their nature, might apply to certain contextual behaviors and absolutely not apply to others. How do you differentiate the difference? Well, in Trader Lab, basically, it's that you need to understand context. Hardest part of this whole thing, besides the psychological part, is understanding the behavior. This is mean reversion outside in trading. If you recognize you're in two-sided trade, then you can deploy an indicator to help you see extremes. So what is the market pulse showing me here? Let's look. This is showing me the delta which says long, 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 long. Market pulse here is showing me excess. This is why you can get run over with indicators. Is this a short right there? You got a little ripple. You'd take a stop. Comes outside. Now the delta, so it's only shorts based on delta because you're trying to get the longs in here, and you want, and at some point you're going to fade the longs to get the rotation for the mean reversion, if that's your thing. So let's look. Now let me help you with this. Do I have a sell trigger there? Do I have a sell trigger? Yes, no. There's a selling. There's my volume. I get a buy here. Where's my next sell trigger? Let's look. I have buy delta. Remember, I'm trying to get who's gonna provide the fuel for the rotation in mean reversion. Here, is that it? Let's look. Market pulse. Delta. This is alignment for potential short. Where's my trigger? Let's look. Where's my trigger? I don't have a trigger. Goes higher. Market pulse shows an extreme. Now let's look over here. Now I don't spend time on this because our nature as retail traders is to want red light, green light. That's why most retail traders, and it's a personal opinion, are not in the business anymore. Most of them fail because they think the business is made up of this. It's not. Here's excess volume. Here's buy stops. Let me just look a little higher up here. You got some sell iceberg going off, nothing material. There's just nothing going on here. Here's my excess. Here's my volume. Got nothing. Little seller. Got my buy delta. Still, everybody's long. Market's long. Watch. Very nuanced. Icebergs. Seller. Change in behavior. See the change in behavior? Now, I got to try to get short for mean reversion. Let's see if it comes back and if I have a way in. Nope. No way in. So the closest you can get into this thing is in here. And this is where you're going. 85, 92. It's doable. Your stop's got to be out in here someplace. And you're going for this to unwind these longs. Oh, actually, here, look. So this is your too high, okay? Here. There's your seller. This is the bottom edge of the volume, right? Here. So you're looking for a pullback. You could sell this if it's in your plan, and this is where you're going. So, because it's mean reversion. Now, let's hold this location and scroll. There's your test. This is a short also in the Trader Lab. And you're going for this, right? Okay, Trader Lab short. Now, I'm sharing this with you, and I'm going to also give you a huge caution that if you just try to go red light, green light, you're going to have really a bad time with it. You need to understand the condition of the market before you can deploy anything, or an indicator especially. What I have found, and I don't use this in my trading, but I wanted to share it with you. And if you're just doing this, oh, it's green, it's time to sell. You know, I mean, look at this. Right here, it's showing what? Isn't this a short? See what I'm saying? If you don't know what's going on, you're going to be doing, if you take a short here, you're going to be not only under the bus, it's going to back over you 2 or 3 times. That's why indicators are problematic unless you understand the condition of the market. Like here, This is doable for a rotation. But what about this? Under the bus. Can you tell why you wouldn't short here? Because it's mean reversion. It's outside it. So the only time you would use this as an example, and I wanted to talk about it because you need to understand the condition of the market. And the problem for retail traders is having a one-size-fits-all process and thinking somehow what you do in a running market is going to work in a mean reversion market. Different plan. I really want to stress this. If you're in the Trader Lab, you know what this is. You also should know this is the hardest condition, I think. And it's just for me. I don't know about you. By the way, if you're highly skilled at mean reversion, you should talk to me because I want to do better with it. I typically don't know. I don't know any way to know that I'm going to have a problem I'm going to go rotation on stock and not be directional. And I didn't know it until we came out the bottom of that early longs that we were looking for. So this is back to here, mean reversion. Back outside, same trade, mean reversion, trying to go to the mean. So if you took a short out here, this is your target, and then you're going for down below, right? Doesn't give it to you. Come out here, taking a short, coming back to here, and we're still trying to get to overnight VPOC. That is our trade. So you have a short here, but if you can't get it, you get it here. You get your target, you get your break, you pull back here. Now, right here, it can just come all the way back up, or if we don't clear here, then we have another leg. That's what I know. So let's get back to this thing. Let's see what we're doing. So right here, it's either going to do the following. It's going to come down to our next target area, fill the gap and get here, and so pull back, lower, or pull back and cross over again. Why? See the change in the delta? The market is now short. So down in here, now let's take the opposite concept. Market's long, fuel's below us. Market pulse shows us an excess, and this is only for mean reversion, in my opinion. And I don't use it, but I wanted to show you. I could use it, and I'm researching it. And one of the problems with indicators I want to point out is conflict. In other words, when you have to be very careful because just because this is here and this is long here is not a reason to sell it. Why wouldn't you sell it? Let me help you think about this. Think it through. What's sitting here? Buy stops. These guys shorten this leg, have buy stops here. We come down. I come up here. This says get short. Oh, really? Not me. How about here? Should we get short here? You see what I'm saying? You'd be stopped. If you're just being an indicator person, you're going to have a problem. You need to know what's above here. Buy stops. And here's the stops coming out, 376. Once you know the stops are come out, now you're going to look at this. Write this down. You're going to look at this if you believe we're in mean reversion. Now, the other joy of all this is what stops it from just to keep going? This is joy of trading. We don't know. So right here, if I think I'm in mean reversion, now let's look. My buyers are above here. Remember? There's my down leg. So these shorts, that creates negative delta. Buy stops here. I get buyers here. They're going to hopefully head for the buy stops. Now either I'm going to get buyers here and more buy stops or exhaustion. There it is. There's my sellers. Now my fuel's in this leg. So these guys got torched, the sellers. These guys now go back on to get torched. And now there's stops under here. So now it's mean reversion. Back here, short, buy stops here, sell stops under here, sell stops under here. Take these guys out. Thanks for playing. Come back here. Now, I don't know what's going to happen here. It could just as well come there. But I have what's my target? Is everybody tracking? Very hard trade. Any questions about this? I hope you're getting something useful out of this. I'm looking at this and I still, if I had a cast iron frying pan here, I'd be banging myself in the head with it because it is so difficult to operate. And go back to the top of the stream. Why is this condition happening? If you weren't here for the beginning of the stream, you've missed out on the why. The why is important. Now, not the prediction. There's no prediction. It's conditional. And I don't know which way the wind's going to blow, if you know what I mean, but I do know statistically what my probabilities are. This. So our plan was to go up, to go down, but who thought it would be like this kind of thing? So I was looking for this kind of move coming out of the gate, and instead we got up, down, very bad. Too high, back here, mean reversion. Take these guys out, too high, mean reversion. Now all the longs that are in this thing, under here, under here, under here, under here, brings us back to this. Is it logical? And maddening. Are you guys tracking? Are you with me? You get something out of this today? Today's just not joyous, you know. I'd like to say, oh, it was a wonderful experience today. No, not wonderful. But part of trading. It's workable, but you're going to pay for the privilege of trying to get your context defined. And until, it's kind of thing isn't, it's not broke until it is. Then once you're doing this, and here's the thing. If you're getting long here, which is what our early trades were, and it was okay until it failed, and then when you come back across, now you're in two-sided trade. It's just, and then if you're very active in this, you're going to hit your loss limit long before the opportunity presents itself. You got to have conditional statements, not only of context, but when it's not fitting. So you'll stop trading and you'll say, well, something is not aligning here. What is it? And at some point it will become clear. You don't want to hit your loss limit. It's better, because sometimes we're compelled for the reasons we're not conscious of, like, I want to make it back. I've taken 3 losses in a row. I want to get even. All this stuff, if you hear that in the back of your head, that's your emotional wiring. That is not professional trading. That is what the amateurs do, because now their emotions and the juices and all the stuff in your brain, your wiring, have taken over your mind. In other words, you're not rational anymore. You're under the influence of chemicals. And it really is a chemical response. So, and in your trade plan, you got to have things built in. It's almost like having the emergency brake. There's got to be something that breaks your pattern of behavior. So it has to be defined outside of trading hours. Yeah, the primordial ooze in the brain, the wiring, the fight and flight and revenge and all this kind of jazz that goes on, which it does. You need to understand yourself. And we talk about that in Trader Lab. I often get asked, and quote, someone says to me, can I learn to trade? And I go, yeah, I believe anybody can learn to trade. But many cannot trade. You can learn to trade if you're persistent and you hold yourself accountable. In my opinion, again, it's just an opinion. You can understand how the market works. You can learn it. You can understand structured trades or setups. And you can find out if you can extract a statistical edge. You can do that because that's our business. Now, but even with the best plan, if you cannot manage your emotions, it doesn't matter. Remember, the casino or gaming theory is our model because it's a successful business model. The games and the casinos have an edge, and the casinos are disconnected emotionally from the outcome. They see it as cost of production and overhead, not a personal failure. They don't shoot the dealer if they deals a hand and then a gambler walks out with a suitcase of cash, right? They just play the next hand. So that's pretty much what our business is. But when we get close to it and emotionally involved, everything we know goes out the window. And I call it, you guys have heard of Jekyll and Hyde, right? Dr. Jekyll and Hyde. Dr. Jekyll's the intentional scientist, logical, calm. Hyde is sort of unbridled emotion that scrambles and takes over Dr. Jekyll. So if Hyde takes over, and that's what happens to us, all of a sudden it's click, 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 I'm going to make it back, and your mind is gone. Your trade plan, you don't even know it exists. All of a sudden, you become myopic and you have tunnel vision. Does this sound familiar? All of a sudden, you're on a different planet at a different plane, and you're having an out-of-body experience. There's a lunatic sitting, clicking the mouse. Where did you go? Has that happened to any of you? If you're in YouTube, just click the thumb up so I know it's happened to you. It doesn't tell me who said it, so it'll keep your secret. Has that happened to you, where somebody else is now trading? Give me a thumb up in YouTube. I guess if you're in YouTube, it's never happened to anybody. You guys are doing better than the rest of us. It's an important behavior, and you need to have guardrails for that. In other words, you need to define a condition. Part of a trade plan is not only, where's my setup, which is what most retail traders are all concerned about. What it really is mental state, trade management, rules, conditions. What happens if you go click, click, click? You get long, you get short, like now. Are you long or short? Right here. Are you long or short? Should you be short going for this? Should you be flat because of that? What should you be doing? What is your plan? Or are you just holding, trailing a stop, and accept the random outcome? Do you know that this is liquidity because you did your homework and you're in the trader lab, that the alignment of liquidity gives you insight that someone without a high-tier tool like Bookmap doesn't even see? Does it make sense that this liquidity is sitting here for a couple reasons? One is to attract. The other is, why would professionals, and let's assume these traders that have their orders are in alignment with yesterday's high and the retail price from ETH. Does that make this a valid target to trade towards? It doesn't mean it'll ever get here, but the potential is pretty good, and it's not a trade recommendation. In the Trader Lab, what we talk about is trade management and randomness. We don't know. We'll get here or we'll get within a couple of ticks. Let me ask you, you're sitting here. This is your target, fill the gap. You have liquidity sitting here, which most mortals, unless they have an order flow tool, are not conscious about, especially retail traders. And this was the retail price in the ETH, in other words, the highest volume. And the tendency of the market is to check high volume. This was too high. We rejected it last time we were up here. I'm not paying that. Remember, trading is shopping. It's not magic. It's shopping. If that's too high, and it was in the ETH, and this was yesterday's high, and this was retail in the ETH, in other words, that's a fair price. If we come back here, would this be a reasonable place to exit stage left in spite of what it might do? For me, it is. My target would be this area. And the fact that this is resting in the book, you see it all the way out here. This guy's been sitting in the book. Makes it a target because it has alignment. Does this make sense? And it doesn't say anything about what the market will do. It only is maybe. Notice the behavior. Where do you think we might go? There. So in the Trader Lab, and these are not recommendations, here's the deal. Outside, in, to the outside. This is still, what's the context, everyone, Trader Lab? What is the context right now? What is the context? What trades does this set up in the Trader Lab? Mean reversion. What is mean reversion? Outside in. Outside in. Outside in. Outside in. Not a trade recommendation. This is the condition of this market. Now, this is a viable target because of this. Let's look at this liquidity that was stacked in the book here. What did it keep doing? Bang, 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 back to the reversion. This is gone. This was an obstacle. It's removed. Where's the next? Here. That's a target in alignment with this. Is this logical? Not easy, logical. Are you guys with me? I'm getting a question about something called the IBF. The IBF is a mean reversion trade. However, the trade is here. Let's go look at our mean reversion pool. Let's talk about using an indicator. I'm allergic to indicators. I don't use them, but I want to help you guys think. Think. Don't run to indicators. They're not the solution. They're actually part of the problem. Unless you really have the discipline to put the priority of inputs first. The condition or context of the market is the regulator of how you trade it. It's called context. If you watch my primer webinar, and it's available to all of you in the Bookmap Discord Trader Lab chat, it's got like 27,000 views. Pretty amazing if you think about it. I'm not a vendor. There's no trading course. I'm just like you. I've just been doing this for almost 44 years. That's the only difference. And I always say it's not a badge of honor. It's a badge of pain. Because I've done what you've done, except had the privilege of doing it longer. So if this shows me the leg is short, notice it's here, gave me the rotation to here. Notice down here at target, it shows me the down leg location. This is like real estate, liquidity. So this is a short target. And coming into here, this is a long. Now, where's it? Where's the target? Back here. It's called mean reversion. Now, not a trade recommendation. So I was getting a question about the IBF. Let me explain what this is. This is a Trader Lab structured trade. For me, I'm not trading that. And let me tell you why. We're in a balanced trade. So these levels, the IB high, IB low. So in theory, this is a long from here if you're trading IBF back here. The location for the trade is out here though, because we're not trading IBFs. We're trading mean reversion and we're trading auction levels, which are, let me come back to this thing. This is our outside edge. This is yesterday's high. This is our gap fill. This is our liquidity. So these are right here. This is where you're trading from, outside in. So we're taking auction levels and we're kind of putting them aside because the market is just trading in a range. BC is asking, yeah, CE, did I clarify that for you? And how we doing in YouTube? I hope you're getting something out of this. This is just a hard day, it's just what it is. The thing that is most disturbing for us as traders is understanding context. That's why I invite you to come to Trader Lab if you're in YouTube and you haven't seen these concepts before. This is not an easy day for anybody. Not easy for me. There's no easy in trading. It's only random. So we start with that. Then it's defining the condition of the market, which is dynamic. It changes. That's the other issue for us. We can start out directional. We can get rotational. We could do anything. And it can change. This can turn into a directional market or it can just do slop like this. If you got long because you're in a mean reversion situation, which is here, Remember, what supersedes this thing? Location, condition, or context. You would know it's outside in trading, and you would not know the outcome of the next trade. YouTube, does that make sense? BC, you're saying we opened out of range, out of value, and would it be logical to be looking for longs to VPOC? Which VPOC are we talking about? The one above or the current one? I don't understand the question. Just be more, clarify the question. Just want to check. Okay, developing. Yes, this is being reversion. So it's not where we opened anymore. We already know that we're kind of bracketed by two edges. We're bracketed by this outside edge that we tested at ETH. This is the ETH volume point of control, basically. So we checked yesterday's retail price. And guys, if you're in YouTube, so you understand, when I say retail, trading is shopping. So think about shopping. And what creates high volume? If you're buying a can of tuna for $1, seller sells it to you for $1, retail equals high volume, right? That's where everybody's doing business. Well, the thing about shopping is if this price is too low and we check it, we don't know. And this is too low. This is the ETH low, and this was retail from yesterday. If it's too low, we can reject it. If the previous time we were up here, this is too high, and this is an artifact from the last time we were up around 4,800. This was too high, and we check it in the ETH, and we're going, I'm not paying that. The quote, fair price, unless we fall out of one of these areas, is going to be somewhere in the middle. This was too low in the ETH. It's the outside of that and that, this was the last area that was too low. So if this is too high, previous auction when we were up here, this is too low from yesterday, and then the ETH, which is the most recent auction, this is maybe too low, or retail, then the potential is to do zippity-doo-dah, smacked in the face with a cold flounder, and come back here. That's the potential. Then I don't know. I mean, I don't know anyway. But so if we're looking at a long out here, the idea is to come back here. So how do you deal with this? If you get long, you've got to get risk neutral, and you're going for this, and you're going for the squeeze. That's what I know. I don't know what the outcome of this trade or anyone will be. That's all I know. I don't like it. That's traded. What's there to like about this? BC, did I answer your question? Thanks, Slaughterazi. Slaughterazi is telling us that we have a 10-year tips auction, about 7 minutes, and any external inputs that come into the market can disrupt it, and then the market has to assimilate. And so you can get a hiccup. Also, algos will respond, so it can do that kind of behavior. So the short here for me would be done here. The potential for a long back to here is, and that would be based on this, mean reversion. If it doesn't get back here, the trade will fail. There's nothing more to trading than that. This still is a viable target, You just don't know. Let's look at this. Chop, chop, chop. Alignment, buying structure, pull back to here. So this is your potential long going for that. That's a structured trade, okay? Using an indicator to help you with alignment, liquidity. You got order flow, you got delta showing that shorts are in this leg. You have buy stops sitting above here, right here, so that fuel's still in the market, and there, which is one of the reasons why If we can clear this, we go here. If we can't, then this is going to fail down here. That's as deep as this gets. So we'll watch this. And I only have a couple more minutes. Any final questions? And by the way, if you're visiting in the YouTube, thanks for coming to Trader Lab. Today's a day that, is a hard day for all of us, at least for me. I mean, if you guys are doing good in it, then, visit the Trader Lab because you can help us all do better. This is a workable day and a lot of trades. Hopefully, if you've been active, you haven't done damage. Also, make sure your broker sends you a gift basket because we tend to trade a lot and it's easy to overtrade in this. And flip-flop. And you need breaks. You need a break, an emergency break to stop yourself if you start overtrading and flip-flopping. What I find for me is if I'm going long, short, like if I'm going, oh, this is a long, oh, gee, I ought to get short. And, if I do that, which fortunately I don't do, but if I did, and I have, I just blow myself up. So you got to have a loss limit for days like today also. It's not about one day, guys. The casinos, I'm sure, have days where they have outsized losses, but they take it in stride because they know over a large sample size, they have an edge and they extract dollars from the gamblers. That's our business. And you also need to protect yourself. So it's really important. By the way, whether or not you've done this, I invite you to all visit the Trader Lab. There's 60 PDFs of these structured trades and contextual conditions that you can look at, reverse engineer, and potentially derive structure from to help you define the condition of the market and which structured trades give you an opportunity to participate once you define the condition. It's kind of like the condition really defines what applies. It's not a generic condition. The conditions are very different, and the setups that are appropriate for the conditions also are specific. If you're going to participate, you need to differentiate and only deploy the tools that are appropriate to the condition. And the challenge, of course, is we don't know a condition changes until hindsight. So you're never going to be ahead of it. You're trying to stay with it or align with it. Notice where we are. Now, right here, we either break through, continue south, and remember, this is our target area, or we hold this low, and we come back here, and it's not a trade recommendation. I have no idea. And there's a link on the bottom of YouTube if you're interested in downloading the 60 PDFs of structured trades and accessing the library of webinars. Start with the primer webinar. It gives you a high-level overview of this, plus circles, arrows, and structures, so you could kind of see these trades or structured trades, how they develop and what they look like. And then there's the library of webinars with real-time narration, some up to 4 hours long. So you could see this in real time. Thumb up in YouTube if you got something from this today. I appreciate you visiting. It's not an easy day today to deal with or interesting. It's interesting because of its difficulty. That makes it interesting. But it's not like other days where we're sitting here and we look like we have a crystal ball, because the reality of trading is that's just not the way it is. It's random. So the business of trading, if you're interested in that, come visit Trader Lab. If you want to be part of a community of serious, like-minded traders looking to leverage their collective experience so we all get better together collectively, visit the Trader Lab. Access the link in the bottom of YouTube. You don't have to be a Bookmap subscriber now, ever, never, and you will never be solicited by Bookmap. But there's a lot of free additional education, stocks, options, crypto, order flow with a high-tier tool like Bookmap, algorithmic behavior, market maker behavior options, and a lot more. Thumb up, visit the Trader Lab, access the link in the bottom of YouTube, and like everything, I appreciate you visiting today, and I will see you tomorrow. Hopefully we'll get more directional trading here instead of this rotational stuff, so it'll be more interesting and potentially more rewarding. Have a great day, everybody. Thanks again. Look forward to seeing you in the Trader Lab soon.